fellow classmates. We are from Group 2. I'm Vaishnavi Balan.
I'm Sonia. Najha. I'm Sri.
So for today's presentation, we're going to discuss about chapter 11, National Income Measurement. So for a small introduction, macroeconomic analysis of national income refers to aggregate output, especially in GDP, gross domestic product, and should be measured to assess a country's economic performance and live in a standard through per capita income. This concept is very important to understand the overall living standard of a society. Next.
Okay, so next I'll be explaining about the key concept of GDP. So GDP, which also stands for Gross Domestic Product, is the total market value of all final goods and services produced by factors of production, which is located within a country, regardless of whether such factors are state-owned or foreign-owned, for a period of 1 year. Based on this definition, GDP involves three key concepts: current production, final goods and services, and market value. The current output refers to goods manufactured during a specific year. So this means that the previous year's productions will not be included in the GDP of the present year, since the GDP was already recorded last year. It does not include the sale of secondary goods such as the sale of used cars. Final goods and services are items which are manufactured for final use. But not all goods manufactured in the economy are final products, as others are intermediate goods. So when we look into what is intermediate goods are goods or products manufactured by a firm for the use of other firms throughout the production line. And intermediate goods are not specified in the GDP official statistics in order to prevent double counting. Double counting can be prevented by computing only the value added of the product from each firm throughout the production line. Value added is the difference between the value of goods after the production and the cost during the production process. So as we can see here, this is an example of the value added in the production of table. So these are the value of sales, and this is the value added, and this is the total. So when we look into what is market value means that there is the transaction for the market. So for example, the production service of a housewife who cooks meals for her family and the person who plants vegetables for his own consumption. These transactions are not reflected in the profit or loss statements of business firms. Therefore, it is not counted in the GDP or the national account, which is why the GDP is underestimated. Now I would like to go into the formula of calculating GNP, which is the total market value which is the total market value of all final goods and services produced by the factors of production of a country, whether it is within or outside the country. So we obtain the GNP by adding GDP and the net factor income from abroad. NNP calculates the overall value of new goods currently offered in the economy in a given year after depreciation. It's a measure of the total value of goods and services produced by the citizens of a country, both domestically and abroad, minus by depreciation. So depreciation represents the wear and tear or obsolescence of capital goods over time. And it is also known as the capital consumption allowance. So next I will explain about calculating of GDP. First is expenditure approach. Expenditure approach, this is Keynesian approach. This approach measures the total expenditure spent on all final goods and services in a given period. The expenditure involve expenditure by household aggregate consumption, which is C. Household aggregate consumption ni macam gaji lah. Dia macam gaji, macam contohnya gaji dapat 1,500, lepas tu macam kita akan bahagi dua, nak guna ataupun nak simpan. Tu ialah household aggregate consumption, C. Lepas tu kita ada expenditure by firm, gross private domestic investment, yang expenditure by firm, gross private domestic investment ni dia macam pelaburan swasta kasar. Lepas tu dia digunakan oleh ahli politik dan ahli ekonomi untuk mengukur keseluruhan aktiviti ekonomi di sebuah negara. Lepas tu kita ada expenditure by government. Yang ni yang by government punya, macam federal, state, local. And kita ada net export. So formula dia kita GDPY sama dengan household aggregate consumption C plus I private domestic investment plus G expenditure by government and net export which is X $M. So dalam expenditure approach ni dia, kalau yang C ni consumption ni kita ada durable goods, non-durable goods and services. Kalau investment I kita ada non-residential, residential and inventories. Lepas tu kita ada government spending, kita ada federal, state, local and export, kita ada export dengan import. Ini cara nak kira dia, macam kalau yang ni durable goods, nak cari C ni durable goods tambah non-durable goods tambah services dapat C. Lepas tu bila dah dapat ni kita totalkan semua.
Okay, for the income approach is added by the all of sum in income received in the production of goods and service throughout the economy. There's 8 type of income that can be considered in calculation of GDP. The first one is compensation of employees, proprietors income, rental income, corporate profit, net interest, indirect tax minus subsidies, net business transfer payment and surplus of government enterprise. Income approach also defined by individual income refer to actual income earned by an individual. This income that the individual receives, such as transfer payment, and does not receive unpaid economic profit, Social Security tax, EPF, corporate profit taxes, and disposable income is a personal income, and it also used for consumption and services. So next is the formula for disposable income. Disposable income is equals to personal income minus by taxes or zakat. Another one is disposable income equals to consumption plus saving. So this is a calculation show how to calculate the GDP by income approach. So we need to plus wages and salaries and all of this, and for the corporate profit they already sum up the corporate income, distributed profit, undistributed profit. So the total is 750 plus by net interest, and we can get the national income at factor cost. Then plus with indirect taxes minus by subsidies, and we get the national income at market price. After that we need to plus with net factor earning of abroad. So they already minus the factor earned by abroad and the factor earned to abroad. So finally we get the gross national income. Then the final answer will be gross domestic profit at market price, which is 3,160. So the next calculation is for personal and disposable income. So we need to minus with undistributed profit, EPF, insurance, and plus with transfer payment. So we'll get the personal or individual income. Then we minus with income tax and zakat, we get the disposable income, YD, and minus with the personal consumption and plus with transfer payment by the household. Finally we will get the personal saving.
Next is production value add approach. Calculation of GDP based on production or value add approach, which is the sum of additional value for each price of manufacture of all goods and services. Maksudnya dia macam okay, dekat Malaysia ni economic activity is divided into 3 categories, which is primary sector, agriculture and mining and quarrying, and secondary sector, manufacturing and construction, and the last one is service sector, which is utilities, wholesale and retail trade and others. Dan ni calculation untuk production value add approach. Maksudnya macam setiap tahun ni value add approach dia meningkat. So macam nak kira dia agriculture tambah mining quarrying, tambah manufacturing, tambah construction, tambah service. Kalau service kat sini dia ada import duties, so dapatlah GDP at purchase price.
Okay, next is nominal and real GDP. Okay, nominal means nominal measures the value of a nation's output produced in a year, expressed in the value of the price change for that year. Okay, in a simple word, it means value output using current price, not corrected for inflation. So it means it does not take into account inflation. Okay, for GDP, the value of nation's output in a particular year adjusted for changes in the price level from base year. So in a simple word, real GDP shows if price didn't increase or decrease,
how much the GDP increase or decrease. Real GDP is more accurate measure of the actual quantity of goods and services a nation produce because it adjusts for price changes. So beza nominal dengan real. Nominal does not take into account inflation. Real GDP dia controls inflation. Okay, dia punya formula senang je. Summation of current year price times current year quantity. Yang tu untuk nominal GDP. Untuk real GDP pula, summation of base year price times current year quantity. Okay, ni calculation untuk normal and real GDP. Dia senang je. Kat sini dia orang bagi 2 tahun, year 1 and year 2. And product dia orange, biscuit and chocolate. Price dengan quantity dah given dah. So nominal untuk year 1 kita calculate macam summation of price times quantity. So untuk year 1 orange price dia 0.9 times 12 quantity tambah dengan 2.5 times 20 quantity tambah 6 darab 25. So dia punya total year 1 punya nominal 210.8. Untuk year 2 pula 1.2 times 20 tambah 3.0 times 10 tambah 5.5 times 30. Dia punya total 21900. Okay, untuk dapatkan dia punya percentage change dia, kita kena difference between two numbers divide by the first value times 100. Maksud dia macam 219 year 2 punya amount dengan tolak dengan 21080 year 1 punya divide by 21080 times 100. Dia punya percentage 3.88%. Okay, untuk real GPT dia beza sikit. Kita kena pilih satu base year. So untuk calculation ni dia orang pilih year 1 as base year. So summation of base price times quantity. Untuk year 1 0.9 times 12 plus 2.5 times 20 plus 6 times 25, jawapan dia 21080. Untuk year 2 kita guna balik price year 1 punya. So 0.9 times 20 tambah 2.5 times 10 tambah 6 times 30. Jawapan dia akan dapat 223. Untuk dapat percentage change dia sama je macam tadi. 223 minus 210.8 divide 210.80 times 100. Dia akan dapat 5.79 increase. So percentage of real GDP is called growth rate. And change in real GDP is the change if price is constant. Okay, yang ni price index year. Yang tu nominal GDP divide by real GDP times 100. Untuk real GDP nominal divide by price index in 100, kena times 100, lepas tu times 100. Okay, ni example untuk calculate price index. Assume year 1 is as a base year. The price index for year 1 as base year is 100. So diorang dah bagi price index untuk year 1 100, while the price index for year 2 is 98.21. So price index year 1 ni nominal tadi 21080 divide by real nominal year 1 pun sama kan. So 21080 times 100, jawapan dia 100. Untuk price index year 2 nominal tadi 21900 divide by 223 times 100. Jawapan dia 98.21. Okay, in addition, real GDP can be calculated using this formula. Okay, real GDP, nominal GDP divide price index in 100 times 100. Okay, tadi dia orang dah bagi price index tu 98.2. So 219 divide kena tukar ke 98.2 tu kena tukar ke 100, so 0.982. Jawapan dia 223. Thank you.
So the last part is limitation in GDP measurement. Okay, GDP is a full useful measurement of economical performance. However, there's some limitation of GDP calculation because GDP is included some aspect that is important to our society. GDP does not just refer to the performance of aggregate output but the well-being of a society in the economy. So, dekat sini ada 8 limitation. The first one is underground activities, legal and illegal. The underground activities is a part of economy that is hidden from the vision of government. Because people want to avoid taxes and regulation, or because of the goods and the services being produced are illegal. If the underground activities is a reasonable stable proportion of economical activity, therefore the growth rate will be accurate. Next one is leisure time. Leisure time is economical good does not get measured in an official GDP figure. Increase in leisure there lower the economical growth rate. Next one is improve profit quality. The second one is economical effect. Economical effect is can be defined as a pollution which does not directly lower the economic growth if the standard of a living is affected by the population or production. Our GDP measure does not show the fact. The reason is the device that we are produced to detect the population count as the GDP, but itself does not subtract. The next one is composition and distribution of output per capita, and the last one is non-market transaction. So that's all from us. Thank you for.
Before we end, we will play a short video clip for more clear view. Okay, video ni dia explain what is GDP.
What is gross domestic product, otherwise known as GDP? Gross domestic product is the market value of all finished goods and services produced within a country in a year. Think about the economy economy like a giant supermarket filled with millions of goods like dresses and washing machines and services like dog walking and massages. Every time a finished good or service is sold, we ring up the price. At the end of the year, we ring up the total. That's the GDP. Let's look more closely at some of the details. Notice that we said GDP is the market value of all finished goods and services. A finished good or service is one that will not be sold again as part of some other good. When a bakery buys flour, eggs, and butter, we don't count these sales in GDP because these goods aren't finished. They are intermediate goods that when combined will become a finished good, a cake, for example. But if a consumer buys an egg to make an omelet, the egg is a finished good because it won't be sold again as part of some other good. In other words, our GDP supermarket is like a real supermarket. At the GDP register, we ring up the eggs sold to consumers and the cakes, but we don't ring up the eggs the baker used to make the cake. There are also goods that are used to make other goods but are still considered finished goods. These are called capital goods. If Caterpillar produces a tractor and sells it to a farm, the tractor is considered a finished good. The tractor is finished and its value is added to the GDP. Although the tractor is used to make other goods, it won't be sold again as part of another good. So the tractor is still a finished good. The GDP is the market value of all finished goods and services produced within a country in a year. GDP only counts production. If an old house is sold this year, that doesn't add to GDP since the house wasn't produced this year. Only the sale of new houses add to GDP. GDP also only counts goods and services produced within a country. If you buy a bottle of wine imported from France, that adds to France's GDP, not to US GDP. On the other hand, a computer produced in the United States and exported to France adds to the US GDP. Let's go back to the definition one more time to see some of the limits of GDP as a measure of economic production. GDP is the market value of all finished goods and services produced within a country in a year. If a good isn't bought and sold in a market, then it's not typically counted in GDP. Why not? Counting the market value of, say, all the breakfast cereal produced in the US is easy, at least in principle. Just add up the price every time a box of cereal is sold. Since market prices are observable, every statistician who counts carefully will come up with pretty much the same number. But without market prices, there's no easy or agreed upon way to calculate how much a good is worth. Polar bears, for example, aren't counted in GDP. The statisticians and economists who calculate GDP have nothing against polar bears. The problem is that there's no easy way to calculate how valuable polar bears are. Just because GDP doesn't include polar bears doesn't mean that we can't love polar bears. And if polar bears were included in GDP, that wouldn't require us to love polar bears either. Ultimately, GDP is just a number, but it's a useful number. In the next few videos, we'll show how the GDP number can be used as a measure of the standard of living. But for that, we'll have to make a distinction between the nominal GDP, what we have just discussed so far, and real GDP. So stay tuned. If you want to test yourself, click Practice Question.
Okay, that's all from us. Thank you.